Today on Think Smart with TMFG, Mike and I are going to be discussing the stock market does not really care about the upcoming election. Mike, it's interesting. Over the last couple of weeks, I've had a few clients come in, and their primary question is, what should we do about the upcoming election?
I guess there's this big fear out there about what happens if Donald Trump was actually get in. The weird thing about the fear is we've already seen the results of him being in. And I mean, I didn't like him. He wasn't my favorite person as a president, but the markets seemed to do okay throughout that. I mean, other than the COVID situation, the markets handled that presidency, rather fine.
So here's some of the things that people have been worried about. Am I going to be okay? What happens if the markets fall? What should we do if the markets fall? What's going to happen to inflation? Is it going to come down? What about interest rates? Are they tied to inflation? Are they going to continue to bring rates down? The sole objective here is to try and maximize your after-tax return. That's what everyone's trying to do. Clients are worried, will I have enough money through all of this? Will I be good? And the big fear is, if we get a new president, could we go into a recession?
Well, it's funny. People are more concerned about the U.S. tax legislation that does not affect them than they are the Canadian tax legislation. So even if the taxes change in the U.S., it can have a small effect on the markets, but it's not going to affect us personally in our pocketbook. When you talk about the Canadian elections, it will actually affect how much in after-tax money we have to spend. So,
Mike, you're still an American citizen. How often do we have elections in the U.S.?
It's every 4 years.
Like clockwork?
Like clockwork.
That's interesting. So if I've been doing this for 32 years, how many elections have I been through?
You've been through 6 elections. Or
eight
elections. Sorry.
Eight elections.
Yeah,
and
you're
good at math?
Yeah,
okay.
Sometimes.
So you've been through 8 elections. I've been through 8 elections. And every time we go through an election, these same questions come up. And it's always, in the early days, probably in my first 10 years, I used to be concerned about the elections too. And somehow, after all these years, I don't really care about the election. Now, am I going to be interested in the results? Absolutely. Do I have one preferred candidate over the other? Absolutely. But am I going to change my behavior because of the election results? Am I not going to update my iPhone? My car's coming up, my lease ends this fall. Am I not going to get a new car? Well, I kind of need a car. I kind of need a phone when it stops working. Am I going to buy less groceries because Trump gets elected?
Yeah, people somehow consider when they invest in the U.S., they invest in the U.S. government. They don't. They invest in U.S. companies. And it's a very different thing than actually invest in the U.S. government. So while the U.S. government may have issues and debt issues and all this other stuff, the U.S. economy has continued to produce some of the strongest companies in the world.
So let's look at a couple things that we know will happen. There will be increased volatility, which means based on, debates and things like that happen and new news that hasn't yet happened, the market will react. We know that's going to happen. So especially until we know the actual results, we will see increased volatility.
It's looking for a reason to react to. I mean, it's waiting. Just everyone wants to make an assumption on whatever happens. And as you said, you're watching these debates, and as they go on, there's a meter that tells you who's winning. And as that goes back and forth, the actual expectation of the future of the entire country goes on that little needle, which is a little bit absurd, isn't it?
Which is bizarre because the next morning, anyone who's not a politician gets up in the morning and goes to work, to their job, and live their life. Kids go to school. The world continues going on regardless who wins that night.
Yeah.
It doesn't go on for some of the people who are involved in the election, but everyone else, life continues. So one of the things that we believe is we're evidence-based advisors. And so I thought it might be helpful to look at some of the long-term evidence, whether the Republicans or Democrats are the preferred party to win an election and what's going to happen to the stock market.
Yep.
So let's look at that. So first off, looking back when Barack Obama became president, we were told we were going to move to socialism, and the U.S. as we knew it was coming to an end.
Obamacare, socialized medicine. You know, that's a bad word in the U.S. because think of the term socialized. Socialism is one step away from communism. And as soon as socialized medicine came out, that was the enemy of the Republicans.
So is the U.S. still a capitalist economy?
Of course it is. Look at the growth we've seen in these last few years from all these companies. Look at. I mean, again, Musk won't be my favorite person, but look at some of the stuff that's gone from SpaceX to how Tesla's advanced, and that it's a huge place for people with money, and it's a great capitalist society.
The Democrats predicted a calamity for the stock market when Trump got elected the first time. Did that happen?
No. More clients were scared at that time than anything. As that election was coming on, I had more people say, I want all my money out of the market if Trump's in there because he'll destroy everything. Turned out to be not a financial problem.
What about Joe Biden? We were told the market would crash when Joe Biden got in.
Seemed to have been a reasonable 4 years, hasn't it?
We've been through some ups and downs like any other period. For each of these presidents, the stock market grew. In fact, if you go over the last 8 years, the U.S. has had the best growth in the world economy.
People want to blame the politicians in charge for the situations they get stuck with. Remember when George Bush Jr. got in? The first thing he had to deal with, he got in the year 2000. 2001, September 11th happened. Now talking about a doomed presidency, right? Like, how are you going to deal with that? You have to go through a war and all this stuff. It's the situation is much more important than the person who's in charge. You can have someone bad in charge who could handle it very poorly, but no matter who's in charge during that type of situation, it's going to be a rough market.
And policies that they implement or that they take away take a long time to filter into the economy. It doesn't happen immediately. I always, whenever we go through these things, elections, bear markets, COVID, I always go back to that simple premise. We need to consume goods and services to live our lives.
Yeah.
And that's never going to change regardless who's president, regardless who's prime minister, regardless of what's happening with interest rates. Those things are always the same.
You know what's funny? When I go back and look at, we do this thing called lifeboat drill, right? And we've all been through tons of them. One of the biggest recoveries is back from that 72. You ever notice that, how quickly that recovered?
Yep.
Right? It was this massive recovery from the 70s. And if you look at the presidents during that time, it was Nixon, Ford, and Carter. Now, would they be known as the best presidents ever?
Not one. Not really.
During that recovery, those were the presidents that were in place. I mean, it just started, I guess Nixon was out by that time, but Ford was never known for anything. Carter was never known to be a great president, but people recovered very nicely.
So I thought we'd go back and look at a couple of recent presidents and what happened to the market and was there a correction. So we're going to start with Biden. Overall, the market has averaged 12.8% per year, but at one point, it was down 25%.
Yep.
Go to Trump, the market averaged a little better, 16.3% per year, but at one point, it was down 34%. Obama, in his second term, market averaged 13.6% per year. At one point, it was down 14%, so that looks pretty good.
Yeah.
But his previous term, the market was up 19%, 1 year down 23%. So, and then finally we'll go with Bush. The market only averaged 7.2%. At one point it was down 52%. But he still averaged 7.2, even though the market lost half of its value.
Yeah.
So we've got Democrats, we've got Republicans, we've got up markets, we've got down markets. There's not a big difference.
The other thing that's that people don't tend to know as much in Canada, because they don't go into American politics as much, is the U.S. president is a very weak position as far as leaders of countries go. The president has the power of veto. He can't bring things into law. They got to go through Congress, the House, and the Supreme Court. They have a lot of protection there that gives the president limited power. Believe it or not, the Prime Minister of Canada has a much more encompassing power than the presidents of the United States.
So here's some numbers just to put things into perspective. The U.S. stock market is worth $50 trillion. So we heard, the headline, the market's been a little bumpy over the last couple of days last week. We heard the market lost $1 trillion. That sounds devastating. It sounds like it's lost half of its value.
More money than I can write on a piece of paper.
But it's worth $50 trillion.
Yeah.
So what does that mean? The U.S. economy produces $28 trillion of goods and services every year.
Yeah.
So if it's off $500 billion, yeah, that's called a recession, but it's still producing $27.5 trillion.
Yeah.
And that's what I mean. We need those goods and services to live our lives. We can't go many days without eating food.
I think the problem, too, is we've lost scale. I mean, a trillion is so much, you might as well say a zillion. We wouldn't know the difference, right? It's so big, no one can comprehend this amount of money. And they use it to really get people upset on a headline. So when you see the market falls, that's what they're going to put out there.
Let's use some forward thinking. We can't predict who's going to win. Is it going to be Trump? Is it going to be Harris? We can't predict that. We couldn't have even predicted Biden was going to pull out.
Yeah.
Everyone thought he was going to be there till the bitter end. We've talked about the volatility. We know that's going to happen. You should not be making any portfolio changes based on what may or may not happen. That's pretty obvious.
Absolutely the wrong idea.
You should rebalance if you need to rebalance, which means move back to your target allocation if you're off of it, because the market's had a pretty good run. Maybe it's time to rebalance.
Yep.
And we're doing a pretty good job looking after that for our clients. But do we think we should reduce stock holdings by 10% because of the upcoming election?
Absolutely not, no.
The only one who would benefit from that is the government with all the taxes you would pay. So the governments, regardless whether it was Democrat or Republican, would be happy if every U.S. investor sold 10% of their stocks, right?
Yep.
Don't introduce politics into your investment strategy and process. It doesn't really have an impact. It's a mistake and should be avoided at all costs.
They say don't discuss religion or politics. Don't bring religion or politics into your portfolios either.
That brings us to the end of another week. This is Rob and Mike with Think Smart with TMFG from the McClellan Financial Group of Asante Capital Management, telling you don't make any changes with the upcoming election. We're certainly not, but tune in, watch it, enjoy it, be entertained.
If you have any questions, please visit our website at tmfg.ca.